On this episode, I'm going to answer and then elaborate on one of the most common questions we get as mortgage brokers. Can't I just add money to my mortgage and pay off all my debts? Hi guys, Chris Turcotte here, mortgage broker extraordinaire. Maybe not, but I do mortgages, and I'm here to talk about refinances today. There's a lot of different reasons that people want to do refinances. Some people want to consolidate debt, some people want to pull money out to invest, some people want to pull out money to renovate their homes, or sometimes people even just want to pull out that equity to buy yet another property. So I think it's an important topic, and I think it's slightly misunderstood. A lot of first-time home buyers will think that they can almost do a refinance right off the bat. I'll get a common question of, I want to buy a house for $200,000, and hey, I have a $30,000 car loan that I also want to pay off. Can I just add that there? So I think it's important to talk about kind of the basic principles of a refinance, and hopefully it'll help going forward. The number one thing you got to remember with a refinance is you can only go to 80% of the value of your home. Now when I say you can only go to 80% of the value, really simple math, on a $100,000 house, you can go up to $80,000. So 80% of $100,000. The other thing that gets overlooked is that $80,000 has to include the amount you still currently owe on your mortgage, plus whatever you're trying to add. It has to be under that $80,000 threshold, or that 80% threshold. So point number one really has to be under or up to 80% of the value of your home. Now, to determine the value of your home, you're going to need an appraisal. And unfortunately, that's unavoidable. An opinion from a realtor friend or something like that, while that does help give you a value if you're looking to sell your house, unfortunately, banks do need an appraisal from a licensed appraiser. Once we have that value, again, we can do 80%. Something else to consider is whenever there's new money involved in a mortgage, so if you're switching your mortgage, you're just up for renewal and you're switching from one bank to the next, that's okay. There's no need to get a lawyer involved. Unfortunately, when there's new money involved, whenever somebody has to accept money on behalf of the bank and give it to you or give it to someone else, there are legal fees. So point number three is you are going to need a lawyer to handle those funds. I know I've thrown a lot at you. 80% might have legal fees. You're going to need an appraisal. And then finally, if you have a current mortgage, of course, if you're refinancing, you already have an existing mortgage. So something to consider is the timing of the whole thing, because if you're breaking your mortgage partway through a term, you might incur a penalty. So it's something else we need to look at as well. So lots of things to consider. I hope that cleared up the mystery of the refinancing. There's a ton of benefits, especially if you're consolidating debt. There's a million ways that you can reduce your monthly overall expenses, and one added bonus of a refinance, if you need it, is we can adjust the amortization. The amortization is the life of your mortgage. We can look at changing the amortization of your mortgage, stretching it out if we need to, and lowering that monthly payment. So that's it, guys. That's the ins and outs of refinance. I hope you found that helpful. If you have any questions, feel free to contact us or put something in the comments. Have a good day. We'll see you next time.